Hello everyone, welcome back. Welcome back to the chat room. This is Ed Ponzi. Great to be back here with you. It's August 18th. It's a Monday evening here in the United States. Beautiful mid-August weather. Just filling you in, first and foremost, we do have another entry on Euro Swiss. Now, I realize it's been a while since our first entry. Our first entry occurred, a month ago. So let me make sure that I re-evaluate this for you. First of all, the plan. I'm going to show you the weekly chart. You can see that line at 120. That line at 120 is absolutely critical, right? Because why do we care about that line? That line is put in place by the Swiss National Bank. They have essentially created a zone of supply at 120 for the Euro-Swiss currency pair. And you can see that for the entire year of 2012, for most of that year, the price bounced off of that level. Never really broke underneath 120 in any significant manner. There were some quick short breaks underneath, but they didn't last. And so the line is held. And the plan is to buy in increments as we get closer to 120. So what do I mean by buy in increments? Let's say that your normal position size is one lot, one standard lot, 100,000 in units, right? Instead of buying one standard lot, we buy one mini lot at 120.50, two mini lots at 121 even, three mini lots at 120.50, and four mini lots just above 120. And therefore you have now, if all those orders get filled, then now you've entered one full standard lot. You have your normal size position. We're not adding to a full-size position that's going against us. That's just bad trading to do something like that. But a controlled plan of entry like this, that's what we're working on here. So just to recap it, right? So we got in, that's on the week. Let's go back to the daily, right? And we'll go, we got one lot here, and one mini lot there, let's say, and two mini lots here. And if this continues to fall, then we'll get more. Right, so I'll drag this background up and say we're looking for three more here and four more just above 120 to give us an average entry, well, to give us just to give us a normal sized lot. Now that would be for, like, what if your average entry, what if your average position size is 10 lots? Well, then you'd buy one standard lot here at 121.50, two standard lots at 121 even, three standard lots at 120.50, and four standard lots just above 121. 1 plus 2 is 3. 3 plus 3 is 6. Add 4, you got 10. Do you see what we're doing here? So the plan is, right, a controlled entry on a pullback. We need that. Hold on. We need that. There we go. So a controlled entry on a pullback is what we're aiming to do here. And now we've got the second piece of the puzzle in place at 121. Actually, if you didn't buy any at 121.50, that's even better. You know, if I had it to do all over again, I wish I were starting it now at 121, right? And I could do it a little bit differently, right? I could probably buy 1/10 of the normal position at 121. 2/10 of the normal position, say at 120.75. Then 3 tenths of the normal position size at, say, 120.40 or 120.35, and then 4 tenths of the normal position size at, let's say, 120 plus 10 pips. Because the price tends to spring out of there if it gets close because everybody knows what's coming, right? And in that way, we're really only entering a standard position size. We're not entering some huge position. This isn't some monster position. And it might take a long time, gang. It might take a long time for something like this to develop. This is going to require some patience. Doesn't everything good require some patience? So, they put this in place. They declared it in place way back here, so we shot up. And it took months to get to the point where we were testing it. And we tested it for months, and we were buying, and it didn't go up, it didn't go up, it didn't go up for months. And then, boom, it went up. And one of the reasons why we know the Swiss National Bank is very likely to continue this process is, A, they've told us that they plan to continue this process, and B, not told us personally, but they've told everyone, right, through the press, and B, they bought down here, they bought euros heavily down here and sold them up here, so they made a profit on it. So why not do it again? It worked very well the first time. Okay, so that's most likely what's going to happen again the second time. And the stop is going to be underneath. I've chosen, like that, I would say, look, you don't want to go too close to 120 with your stop because sometimes they will sneak through. An order can sneak through there before the Swiss catch it. So don't put your stop at, 119.95 because it could get poked out. When they start fighting down there at 120, sometimes it spills over a little bit. But I think if you're 30 pips below 120 or more, then you're probably going to be just fine, unless the whole shooting match breaks down. If the whole shooting match breaks down, then we're going to lose. But I don't think we're going to lose, gang. I think we're going to win. Okay, so anyway, to get back to my entry, I started it here. And now I got some more here, and I'm hoping for 120.50, and we'll get some there, and maybe we'll get some just above 120. And that's my play on this. And I have the Swiss National Bank backing me up. They have my back on this trade, right? So I'm not just counting on a support level. I'm basically counting on one of the best run, best established central banks in the world. I'm leaning on. And you really can't do this in any type of trading, so I hope my stock people are paying attention to this. Okay, if you're one of my stock people, I hope you're listening, because this does not happen in the world of stocks. The equivalent would be, imagine one of the world's biggest hedge funds telling you, yeah, we're going to buy stock XYZ at this line, and we're not going to let it break that line. Now, do you think a hedge fund or a mutual fund would ever give you that information in the stock market? And the answer is no. They will never give you that information because the stock market is much thinner. They know that if they promise to defend this line, that everyone's going to jump in ahead of that line, like we're doing right now, right? Everyone's going to jump in ahead of the line and push the price up, and they're never going to get that price where they want to buy. We're going to make it too expensive for them. And that's why when hedge funds and mutual funds are doing this sort of thing, they never tell you, because you're competing with them to buy that stock. When it comes to central banks, you are not competing with a central bank, okay? What is the purpose of a hedge fund? To make money. What is your purpose in this market? Ultimately, to make money. You are a risk manager first and foremost, but ultimately to make money, right? So you are competing head-to-head against that hedge fund or that mutual fund. However, what is the purpose of a central bank? Is it to make money? No. The purpose of a central bank is not to make money. The purpose of the central bank is to provide orderly currency control. In this case, they don't want the exchange rate to fall beneath 120. It has nothing to do with the bank making a profit or loss. It has everything to do with Swiss exporters making a profit or a loss. The bank is not in it to make money. So what they're saying is, we don't want, this is what the Swiss National Bank is saying in so many words, we don't want the price to break 120, and we want you to help us keep it above 120. Because this is a much bigger market than the stock market. There's only so many shares of stock available. In the world of currency, there's always more currency available. Okay, $4 or $5 trillion a day market we're talking about here. So the Swiss are saying, hey, we're telling you that we're going to put in a big buy order in at 120. And if you want to join us and buy at 120, then be our guest. And jump in and join in on the fun. And you might want to not short it at 120 because we're going to ram it you know where if you do. So they're basically, by telling the world what they're doing, they're basically giving the green light to bulls, hey, come join us. And if we join them, we're actually helping them, right? They're trying to push the price up, and we're helping them because we're buyers and they're buyers. We're all on the same team. And at the same time, they're basically giving, letting the shorts know, hey, if you want to short this thing at 120, you're going to have a very bad day. So maybe you should move out of the way. That's really what they're saying. Okay, so it's very interesting. I love this sort of stuff. It doesn't happen anywhere else. There's no other market in the world that offers, everyone always talks about an edge, an edge. I need an edge. I'm trying to, does my trading have an edge? I think if you have a central bank backing you up, that's an edge. Maybe not a quantifiable edge, but an edge nonetheless. Okay, gang. Now, so that's going to do it for Euro Swiss. I think we've explained that pretty thoroughly. Why do the Swiss not want this to break lower? Because it hurts them financially. A lot of people in Switzerland are just hopping on buses and going to Germany and France and Italy and buying in the malls there because it's cheaper. Their currency is strong. You want to take a look at the relative change here over the years. Right? And the Euro-Swiss exchange rate used to be way up here in 2008, and the euro has just fallen and become cheaper and cheaper and cheaper, and that makes goods in Europe outside of Switzerland cheaper to the Swiss as this has come down. And so they've said, look, this has come down from 165 down to 120 and even went below 120, so we're saying no more. We're going to put in a floor at 120, and that's that. Okay? All right. So now you know why, and now you know how. And next up, by the way, we're still short Euro USD. This is a little bit frustrating, the fact that it hasn't gone anywhere in about 2 weeks. I've gone to more places in the last 2 weeks than this currency, okay? It's not moving. The wicks on the downside, I have to admit, this makes me a little nervous when I see the wicks because it means buyers keep coming in and pushing it up before it gets to my target. But on the other hand, it's not as if the buyers are able to push it up, very far. They push it up and it comes back down. They push it up and it comes back down. They push it up and it comes back down. So, here we are again. It's at 133.61, so I'm only 56 pips away from my target, right? My stop is 134.65, so I'm 100 pips from the stop and 55 pips from the target. That's great. That's wonderful because it tells me that there's a better chance I'm going to hit my target than my stop. Not only that, my stop is at break even. I've already taken profit at this broken line, which is 134.15. So we entered it at 134.65. Our stop is now 134.65. We closed 1/3 at 134.15 for a 50 pip profit. We are still in 2/3 of the trade. We're gunning for 1/3 here at 133.05, and we're gunning for 1/3 here at 131.50. Now, what's the catalyst that's going to move this next? You can see it's gone nowhere, right? It's gone absolutely nowhere. The next catalyst that is likely to move the euro, it's going to be Jackson Hole. I mean, there's a lot of stuff happening this week. I know, but it's really all about Jackson Hole, and here's why. First of all, are the Fed minutes important on Wednesday? You bet. FOMC meeting minutes on Wednesday, 2 p.m. New York time. Yeah, that's important, but nothing quite as important as Jackson Hole. And Jackson Hole, I believe, begins on Thursday. Yeah, the Jackson Hole Symposium, here it says Saturday is day 3. So it's going to begin on Thursday. And why is this a big deal? Right? Here it is, day 1, all day, Jackson Hole Symposium. Okay, a little bit of history, a little bit of background. Jackson Hole was where Ben Bernanke first laid out the groundwork for quantitative easing. I'm talking about QE1, the very first time around. They laid it all out at Jackson Hole. And so, ever since then, Jackson Hole takes on an added significance. Okay, it's an important, historically it's important, and it's a place where historic things have occurred in the recent past. Jackson Hole is also interesting because you will have Yellen from the Fed and you will have Draghi from the ECB. So you're going to have the head of the Federal Reserve, Janet Yellen, and you're going to have Mario Draghi, head of the European Central Bank, are both going to be there, and they're both going to be speaking. Try to think of how many times you've had the heads of 2 major central banks at the same place at the same time. You know, it doesn't happen that often. And especially, we're talking about Europe and the United States. Okay, we're not talking about small countries here. We're talking about big economic powers. So the whole world will be watching. They're on a big, imagine it's a big stage with bright spotlights shining on it, because that's exactly what it is. The press from all over the world is going to converge on tiny Jackson Hole, Wyoming. And what's going to happen in Jackson Hole? Well, nobody knows, and this is the wild card. And I think that's why it's going to be a little bit quiet maybe in the days leading up to this. Even with economic data coming out, I think it's going to be a little quiet. Yellen would surprise no one if she came out as being dovish. That's fine, and that's expected. And dovishness would weaken the dollar. But Draghi, if Draghi announces, imagine this, how interesting and appropriate would it be if Draghi were to announce Europe's quantitative easing at the very same place that Bernanke announced quantitative easing for the U.S. Imagine the historical significance, right, and the historical echoes of that. So think about it, right? It could be kind of a big deal, and because of that, you might not see much action ahead of it. Anyway, if he announces QE, we should get very quickly to the second target. If we make it to the second, even just on a knee-jerk reaction from this level, 50 pips is nothing. So if he announces QE, I think you're going to see 133.05. If that happens, we're going to bring that stop down. We'll close another third of the trade at 133.05. We already have our target in. And we'll bring the stop down to 134.15 if the second target is achieved. Okay, so that's the scoop, man. That is what's happening with Jackson Hole, and it's really, you know, it's really very significant, and it takes on a huge significance at this point. You know, by the way, somebody mentioned about New Zealand yen being a support resistance trade, like an elevator trade. And point of fact is, it actually is working out that way. You see the hammer here on New Zealand yen, and you see the hammer back here. They're both around 85, 75 low area. It looks like we're bouncing up out of there again. New Zealand looks like it's gaining a little bit of traction, but I wouldn't be too quick. Here you see a little bit of a bounce here too, a smaller bounce here against the dollar. I wouldn't be too quick on New Zealand because tomorrow, Tuesday, right, the August the 19th, you're going to have the dairy milk auction, which we know is a big market mover. And the last dairy milk auction, they have it about every 2 weeks. The last one drove New Zealand dollar down as milk prices hit a 2-year low. Milk isn't going to fall forever, but it could fall tomorrow again, certainly. We have no idea, right? So I'd watch that pretty closely. You know, the whole milk thing has been a tough nut to crack with this one. It's very hard for them to make money otherwise. I mean, it's a big part of GDP. You know, a big part of exports is the milk business in New Zealand. Okay. All right. So as we moving right along here, right? There are other things that are going to matter, but they're not going to matter as much. For example, you see all these services PMI numbers and manufacturing PMI numbers out of Europe. Those are always important, but they're just not going to be as important this time around. Just imagine, though, if they all come out bad, if these numbers all come out weak, that just makes it easier for Draghi to go up and say something like, hey, we're going to start quantitative easing and like lay out a date. Could you imagine if we dropped a date? You know, the euro, we might hit our third target on the euro if that happens. So I guess I'm kind of rooting for it to happen. Maybe it would also push our euro Swiss down low enough that I could buy some more at 120.50. I'd be happy with that as well. Okay. So anyway, there's a lot of data coming this week that's normally would be market moving, but the closer you get to Jackson Hole, the less important it'll become in the short term. One thing that I think you really have to pay attention to, housing price index in the UK dropping. Remember that the big knock on the UK has been they're going to have to raise rates because housing prices are going through the roof and they're afraid of a housing bubble. Well, guess what? They enacted some rules to slow down the housing market, and it's working. That plus sanctions against Russia mean that perhaps fewer Russians will be buying real estate in the UK. You add it all up, and the answer is that the British pound, right, the UK doesn't necessarily need to raise rates all that quickly or as much as we thought. Now, isn't it funny how the technicals figured it out first, and now the fundamentals are catching up? Same as back here. The technicals figured it out first, and then the fundamentals caught up. Now it's happening in reverse. So British pound looking more and more like a short on that type of news. As far as the dollar index is concerned, you know, it's come up to this area here, and it's been hanging around here for like 3 weeks now. That's a very important resistance area right here. But I would just point something out. It hasn't backed off at all. It's not like the dollar index hit resistance and pulled back. The dollar index slammed into resistance and now it's just been sitting there for 3 weeks. What could move it higher? Well, remember, if Draghi comes out dovish and saying words like quantitative easing and stuff like that, that's going to make the euro weaker. And there's two sides to that coin, that if the euro is getting weaker, it's probably getting weaker against the dollar. So comments from Draghi could make the dollar stronger, not, you know, and the euro weaker at the same time. So imagine that. I mean, because there's been no pullback here. We went into this resistance and it's just kind of sitting there. So yeah, could it go higher? Absolutely. Now, if the dollar does go higher, if this scenario happens, what comes down? How about oil? Which looks terrible anyway. Oil has been, you know, highs, lower lows ever since it broke support. It's amazing that oil does not go up in an environment where you have war in the Middle East, you have war between Russia and Ukraine. How is it possible that oil is falling under these circumstances? You know, I'm not that much of an energy expert that I can answer that confidently, but a good friend of mine who is an energy expert says that there's just less speculation now in these markets. There was always like a speculation premium, and then the first sign a bomb was dropped, the oil price used to jump. And he said, you know, a lot of those speculators were at banks. They're not trading this anymore. You know, so a lot of these Dodd-Frank rules that really hurt business in a lot of ways, some of them could be helpful also by getting some unnecessary speculation out of the oil market, out of the energy markets. So listen, all regulation is not good or bad. There are good regulations and there are bad regulations. It's very possible, and Dodd-Frank has certainly had some negative repercussions on currencies, but it's possible that it could be having some positive repercussions in the energy markets. So, right, there's always a give and a take. Okay, so anyway, all this plays out as we go into Jackson Hole. Now, that covers currencies, but stick around for a little bit of stocks, because we have some interesting trades going in the stock market. The stock market was way up today, and I'm going to go $INX, that's the S&P 500 contract. And it's, once again, you know, it's the 100-day moving average to the rescue. One of these days it's going to break, and when it does, I think everyone's going to freak out. But as long as we're above that 100-day moving average, we're still okay. So you can see that all the times the price has bounced off of that moving average since the beginning of 2013, it's really been a very important level. Now, resistance lies just ahead, though. Right? We're now getting up very close to resistance. And you'll notice that we're very even-handed at this point. We have 3 longs and 3 shorts because you're getting into a tighter and tighter area. If this breaks down, we want to be overall short. If this breaks up, we want to be overall long. Does that make sense? So let's take a look at our long positions. Big day today on the S&P 500. First long, Apple. iPhone. Next iteration of the iPhone expected to come out in less than a month, maybe just a couple of weeks away from the iPhone 6. And Apple, I see a lot of green candles on Apple. I want to point something out. You notice that our longs, green, green, okay, that's red, but believe it or not, that's actually, did the price close up? We closed at $95.99. The next day we closed at $95.97. Okay, that's a 2-penny loss in a $100 stock. So green, green, virtually nothing. Green, green, green. This has gone from, you know, below 94 up above 99, and now you're getting very close to all-time highs. Above 100, this could take off. Let me show you why. Now, we've been long this forever. It's been very, very good to us. But look at this right there. By the way, that's an almost perfect evening star pattern here on Apple Weekly. Let me zoom that for you a little bit. Okay, bullish candle, gaps up, doji, gaps down, evening star doji. Perfect example, right? Only one day, and the close that one day was $100.01. The high, the all-time high, that's the all-time closing high, and the all-time intraday high is $100.72. That is the all-time high for Apple. And look how close we are to it. We're less than $1 away. Just seems like it wants to go higher. So naturally, we're sticking with this one. We did close half of it a long time ago at a nice profit, I might add. But, you know, there's no resistance above 100, gang. There's no resistance above 100. I'll show you the monthly. No resistance above 100, right? So if it goes, it could really go. We could go from 100. What's going to stop it? There are no sellers waiting above. 100 itself could act as resistance, but if it breaks through there, there's just nothing above it. It probably goes good and higher from there. Thank you, Apple. Thank you for being such a great stock for us. We're up a bunch on this. I don't know how much anymore. It's well more than 20%. J.C. Penney. Okay, I was kind of bragging on this last time, and it kind of made a fool out of me because after hours we were showing 1075, and then we came back down, and we're back on our, but we're close to 10. We're at 987. Remember, we bought this at 860, so we're making good money here, and we still like the pattern. We're in an ascending triangle pattern on Penny. Penny's getting close to 10. Again, it gets above $10.30. It could really run. So as good as Apple and J.C. Penney have been to us, they could get better still. And the last long is Dean Foods, which has not been terribly good to us, but I'd like to point out that there's been a lot of green candles lately on Dean Foods. So we're not down quite as badly as we were before. We're probably down like 10% on Dean Foods. No big deal when you're up, way more than that on Apple and way more than that on J.C. Penney. And like I said, Dean Food is one of those names that I think it's just gonna lay there, and then one day you're gonna be surprised. And that's what I think is going to happen. Now that's our long positions. Our short positions, take a look. Lulu had a tiny little green candle today on Lulu, but really, and is it putting in a support? It could be building a base down here. I cannot tell a lie. But the truth is, look at that chart, man. I mean, if mentally flip that upside down and tell me you wouldn't want to be long if this part was way down here and this part was way up here, right? And it was a straight line, because it kind of is a straight line like that, and I think you'd look at that and say, gosh, that's a great stock not to own. And if you turn that chart upside down, it would be extremely bullish, right? So we're short that one. And remember too, like, okay, a tiny little update. Remember, the market's roaring again after bouncing off the 100-day moving average. Is this stock roaring higher? It's still trading near its lows. TJ Maxx, symbol TJX. Again, stock market is roaring higher. So let me show you, right? INX, take a look. Roaring higher. Our longs look like this, right? Dean Foods looks like this, lots of green candles. Apple looks like this, lots of green candles. Our shorts don't look like that at all. Our shorts look like crap. That looks terrible. And then TJX, it's going nowhere in an up market. It's a wonderful sign if you're short. A wonderful sign if you're short. And KMB, we're down a little bit on this, hardly to get excited about. We shorted this at 170.60. We're down $1 on a $108 stock. It's less than 1%. Okay? Let me show you something too. Kimberly-Clark, market is getting close to all-time highs. This stock is having trouble with its 200-day moving average. Look at the way the 50 is starting to turn down like they want to cross. Okay? I like it. I like all of our positions right now, except gold, GLD. I can't decide whether to keep it or dump it. It's just my whole reason for buying it seems all shot right now because I was expecting a third quarter rally to begin in early July. We're in the middle of August and it hasn't happened, so I'm probably going to let this go any day now. Look, you've got a big triangle. It's a big symmetrical triangle at this point. We thought it was a breakout. It was a breakout technically, but you know what? The breakout fizzled. And now you got this. You've got a sideways chart, a symmetrical triangle, no direction. I think we got to let this go. Okay? All right. That's going to do it. We'll speak again very soon. Everybody have a wonderful day, a wonderful evening, a wonderful week, and we'll be back in a couple of days for more on stocks and currencies and commodities. And we didn't get any questions this time around, so please do send your questions in. We're more than happy to answer them for you. My name is Ed Ponzi. Thank you very much for listening, and we'll speak again very, very soon. Everybody take care.